Money in the bank.
Hey Brett, how's it going today?
Good, Ange. How are you?
Pretty good. So that means this is another episode of Money in the Bank. I'll start off today with another trivia question. How about that?
Oh, great. My favorite.
All right, so what is the average credit score in America?
So this includes people that just have credit today, right? Not like babies.
Right, yeah, it doesn't include people who haven't established credit yet.
There's always a trick to these. So I would say it's like maybe in the neighborhood of like 600, 650, something like that.
That's actually really close, so it's 687.
All right, I was in the ballpark. All right.
Yeah.
Better than usual.
But credit scores can range from 330 to 830, so I think that's pretty good. It's definitely a little closer to the top end than the bottom end.
Yeah, I mean, I've been trying to maximize my credit score for like 10 years now, and it doesn't seem to be budging much. So, I mean, if people are in that ballpark, that's great, because all you hear on the radio and like advertisements are, you've got bad credit or no credit, like here's all this stuff, right? So
yeah, exactly. So today, I feel like credit scores are kind of a black box. Like nobody really even to this day, I don't know how to calculate mine. Like it's all these random factors and variables, and it goes into this big black box, and then they like spit out a number. And so, I think today we're going to talk a little bit about, what credit scores are, why they matter, how you could improve it. But, I think the big thing is it's there's all these things that we can tell you, but at the end of the day, like, it's not like you can sit down with a pencil and paper and calculate your credit score.
Right. I've been paying attention to my credit, like, closely and trying to maximize it for over 10 years now. And not for lack of trying, like, I cannot figure out how to, like, make this number, like, go all the way to the maximum.
Well, you're not old enough.
That's true. That is one of the things I've learned.
And that's a big priority of one.
Yep, got penalized for being young and not having enough credit history in the first place, so set up for failure.
Yeah.
So then, why does credit matter? I've never needed really to take out a lot of debt or anything, so what is the purpose of having a credit score in today's market?
Yeah, so that's a really good question. A lot of people do have to take out loans, whether it's for houses or automobiles. And so when you take out loans, then you'll actually get better terms. You'll get better interest rates. If you're taking out a car loan, you might be able to get dealer financing with like 0% interest rates, right? So having good credit when you take out loans will help you get better terms on your loans, but also just the ability to get a mortgage or get a car, right? If your credit score is like 330, I've never even heard of anybody's being that low, but I guess it's possible. But I think if it's that low, like you won't even get approved for this stuff. And even if you don't want to purchase things, even having a credit card, having a higher credit card limit or having a better interest rate on your credit card or even qualifying for a credit card, you do need a good credit score for that. Mm-hmm. And to take that one step further, most people, even if they're not in the market to buy a house, they want to rent a house. And I'm sure as landlords, we look at credit reports and we look at credit scores when we're screening our tenants to see if they qualify to live in our rentals.
Yep, very heavily. That's a major factor.
And to us, that's kind of an indicator on like, will they pay or not, Mm-hmm.
Yeah, and that's the purpose is what is the likelihood for them to pay, and that's what we use as a key indicator. And another one is, do they have enough funds, or are they living paycheck to paycheck now anyway? And that's a huge red flag also.
Mm-hmm. Well, and if they are living paycheck to paycheck, is their paycheck high enough to pay for rent?
Right. Yeah.
That's a big factor too.
Mm-hmm. So it's a good thing to have. It's a good thing to pay attention to then, right? Is there like a ballpark of like kind of where I should shoot for? Like if I have below a certain number, am I going to be like passed over for a lot of this stuff?
Yeah. So, this is kind of a hard question to answer exactly because it varies based on auto, compared to home. The auto industry, they have their own kind of set of numbers. The big ones are like TransUnion and Equifax.
Yep.
But they can be wildly different from each other. And I think mortgage people tend to look at, 3 different scores, and auto loans focus on a different one that naturally is a higher shift. But the standard credit score that people talk about, if you're over 650, I believe that's generally considered good. I really, push for people to get closer to that 700 or over that 700 mark, and then you're really not going to have a problem qualifying for just about anything.
Yep, because we're on, kind of the upper tier for our community for what our properties are for the tenants we're looking for. And I'd say anything below 600 is kind of where I've set my bar at.
Right.
Because we just see a good amount of tenants that are over that. So anybody under that, I'm not really looking at them because I don't have to. So.
Right. Which makes sense. If the national average is 687,
yep.
then, that's why I kind of say shoot for 700, be a little bit better than average, right?
Yep.
Shoot for that B+.
So how do people, I've had visibility into my credit report through like mint.com and stuff. They started offering that many years ago where like every 3 months or something, you could just click a button and it'll do like a soft check for your credit report. So that's one way. What's like a more official way to look that up?
So the most official way is to actually, obtain an actual credit report from Equifax or TransUnion. But
that's going to be a lot more information than just a score. Right?
Correct. And the downfall there, and I don't even do this personally, yes, you can get that exact number, but that's considered a hard pull.
Okay.
So the only time that I personally see my, actual credit score is when I'm applying for some type of loan, which is traditionally a mortgage loan. That's the only kind of loan I've really taken out in the past few years. So at that point, when they run your credit, when the mortgage company runs your credit, they will send you a copy of the report. And the other thing to highlight here is, like, if you're in the market for a car, you can go to multiple dealerships and get these numbers run, and it's not going to hurt your credit because it only counts as one hard pull as long as you do it all within a month or something.
Right, and that's the same for when you're looking for a rental property too, and they're doing a credit check or a background check against you. Yeah, that's what we know is it's like somewhere between a 30 and a 45-day window. Probably depending on which agency you go through, but I think it's 45 days.
Mm-hmm.
So anywhere in there, you can pull it as many times as you want. It all counts as one pull against your account.
Yeah.
So let's talk about what the different disadvantages are of a hard pull versus soft pulls that don't really have any.
So hard pulls, and it's kind of funny. I guess I don't really know why this is, but hard pulls, when you get that official credit report, it counts against you if you start obtaining more than 2, and I think they drop off after 2 years. So like 2 in any 2-year period is okay, but once you start doing more than that, it dings your credit a little bit. And again, this is like 2 within those month-long windows. So, let's say you buy a house 1 year, and then the next year you buy a car, and then, in that same year you decide to take out a personal loan or something. That's, that third one will kind of start hurting your credit. So I always tell people try to keep it under 2 in 2 years, because then they start dropping off, so
mm-hmm.
it's okay to do it again.
Yeah. And so, doesn't seem like there's a good justification for why that would be hurting your credit. It's just a bureaucracy thing that they have.
Yeah. It's just weird because then, soft pulls are done. Sometimes if you call your credit card company and you want to increase your credit limit, sometimes they'll tell you they have to do a hard pull, but then sometimes they can just do a soft pull and that doesn't count against you. So I don't really know, why they justify that, but maybe it's more work or whatever. So they've set up a system to limit it.
Yep. Okay. So just be aware. It's a pretty garbage rule, but it's a thing that exists. So watch out for it.
Yeah, and so since you mentioned Mint earlier, when Mint pulls your credit, that's a soft pull. And, something I want to caution about, so I used to use Credit Karma years ago.
That was the first one I ever heard about that was like for a free service that would just tell you what your credit score was. Yep,
so I used to use Credit Karma, and now, I mainly use Mint, but some of my credit cards also will tell me what my credit score is,
yep.
On that website. What I want to caution here is those generally aren't super accurate.
Mm-hmm.
So, I had a friend who, I had been using Credit Karma in college. And so I told her to start, checking it out or looking into it. And she started using it. And then she went to get a car and she came back to me and was like, Angela, I can't believe you told me to use this garbage website because it was completely different from what she found out when she went to get her car loan. And it was actually quite a bit higher on Credit Karma versus when she went to get her loan. So she was a little disappointed. And, I think the hard thing there is we were in college. We had just started establishing our credit. And so, it was hard for it to be completely accurate. So I tell people, once you kind of have an idea where your credit score really is, bump it up against whatever tracking you're using, whether it's your credit card or Credit Karma or Mint, and then use those kind of like soft pull numbers as a trend to get a feel for, okay, my credit score is in general going up, or it's in general going down, or it's staying relatively the same. Because that'll kind of give you an indication in the direction you're headed. And that way you're not relying on that number to be like, okay, I have excellent credit and I'm going to get the best, dealership qualified financing or whatever. Mm-hmm. So that's just kind of a good thing to keep in mind, that those aren't necessarily perfect. But that doesn't mean I still update my Mint credit score, every quarter or whatever you're allowed to do.
Right. I mean, if I'm already looking at the website anyway, it's just an extra button to click and then boom, there it is. So,
yeah.
And from looking at that website specifically, I suppose, Mint, right? I don't think my credit score has moved within outside of a range of 20 points. Up or down in over 10 years. And I've opened credit cards. I've done all kinds of things. So what are some tips to maybe increase your credit score if that's your goal?
Yeah, that's the $1 million question, right? So, there's all these different factors and they all have a different weight. And so, from what I've heard and what I've kind of experienced, the most important one is time. And it's just age of your credit history, which takes a long, there's nothing you can do to speed that one up, which is kind of a bummer. But that's why I tell people, even when you're 18, 19 and you're in college, be really responsible. That's my first point here. But then open a credit card. Don't be dumb with it. Don't charge things that you can't afford, but open a credit card and just put, your groceries on it and then pay it off every month, because that starts building your credit at a young age. Mm-hmm. Another big thing that helped me was I had student loans and I got those when I was 18. So then, that helped build my credit at a young age. So, starting as soon as you can, that way, I bought my first house when I was 23, and that way I already had 5 years of credit history when I was going into that home purchase. So time is a big one. Utilization, which is basically out of the credit limit you are given, how much are you utilizing? So let's say you have a credit card and they give you a limit of $1,000. Don't go over $300 that you actually charge to that card. And I think this is one that a lot of people don't realize, because they think, oh, well, they gave me this credit limit, I can, charge up all of it. But it actually will hurt you to do that. Okay. So, just kind of don't go crazy with it and then pay it off.
Right. And so I assume, again, this is a super complex formula. The weighting of these things are all complex and variable, right? Probably you could spend up your full credit limit on the credit card one month, and if that only happens 1 or 2 times, it's probably not going to kill your credit history, right? Versus having a ton of credit accounts open and having a car loan and having a mortgage, right? That probably is weighed a lot higher.
Right.
In
so,
the background.
Utilization is actually weighted, it's actually a medium weight, but it literally is a snapshot to when your credit score gets pulled. So when I was buying my first house, I didn't know that rule. And I hadn't adjusted my credit limit since I had been in college. So I had a credit limit of still only $1,000, but I was working full time and I put all my groceries on my credit card and all my gas. So you can imagine I spent most of that $1,000 in any given month. Mm-hmm. Just on those items, my phone, everything went on that credit card. And so, it just had a balance of $700, and I always paid it off every month. But I remember sitting with my loan officer and he told me, next week we're going to pull your credit score to do the rate lock, the interest rate lock on your home. And he's like, if you can get this utilization down under 10% before that, you'll get a lower rate. And I was just like, oh, I mean, I could pay it all off. And he's like, oh, really? Like, yeah, do that, you know? So I think that's just kind of something to keep in mind. Like, if you know you're going to be getting a loan or something soon, just kind of get your cards paid down and don't, put a ton on them at any given time.
Okay, so that's really important then. If that was, like, there's a certain day that they're going to go check it, and then that's a big factor then. So
right.
That's good to know.
But it's not tracked over time.
Yeah, it's not a trend analysis. It's a point in time. Yeah, okay.
Something that is tracked over time that is extremely important, though, is paying all of your bills on time.
Mm-hmm.
So I highlight this especially because, literally when you look on Credit Karma, it'll show you, like, different bars. And as soon as you have missed one payment, you go from having, like, a perfect score to having just, like, good. Like, it's literally one payment will knock you down.
So that means if I'm late on, like, my internet bill or utility bills or anything where they would, like, generate, like, a late fee or a claim against my account?
Anything where they would report it. So, a lot of utilities actually have a grace period.
Okay.
And they might not tell you that, but a lot of them will have, like, a 10-day grace period or 15-day grace period because they don't want to go through the hassle of having to report everybody all the time, right? And so, not saying it shouldn't be late, but, like, the most important one to make sure you're paying on time is your credit card.
Mm-hmm.
And then, utilities and rent and all of that to follow.
Okay. Yeah, because they're gonna feed that right back into the system, right? If those are the guys that you fail to pay.
Exactly.
Okay, so what you said duration is really important. So if I look at the math of that formula, it says in order to have the best score I could possibly have, I would want to open as many credit cards as I could as young as I could, right? And that will give me a better long-term utilization score.
So,
I feel like that's super risky and probably not true.
Kind of true, kind of false. So I remember when I first started looking at Credit Karma, it was like, if you have over 22 accounts open, that's like the best, right? And that seemed like a really big number to me. But then through the years, I started getting different credit cards. And, another big factor is having different types of credit. So this is probably why my credit score is better than yours, because I've had student loans, credit card, auto loans, and mortgages all in my name, and different ones. So at this point, I've, had over 20 some accounts, and I've had a variety of different accounts. So, like, if you go out tomorrow and you just get 20 credit cards, well, one, you're probably going to start getting declined about halfway through the day. And second of all, that you're not diversifying anything. So they're just like, well, this person doesn't ever need any more credit cards because now they're kind of high risk,
Right.
So you want to be careful with that strategy. And you kind of just, you do want to have a lot of accounts to have that healthy history, but kind of let a lot of it happen naturally. I think as you progress, I got a credit card in college because it was like one of the easiest ones for me to get approved for. Well, then a few years later, I could get approved for the Chase Freedom card, which had 1% cash back. Well, then a few years after that, I heard about the Citi Double card that had 2% cash back, and I opened that instead. So, in that example alone, that was 3 credit cards. And then at one point, Delta was offering a really good promotion, so I picked that up. So, like, just kind of throughout time, I picked up these credit cards, and now, my history is still building, and so every time I open something new or when I get a mortgage, it shortens it a little bit. But at the same time, if you close accounts, they drop off. So it's not great to just open a bunch and be like, oh, I'll just close them in a year. It's good to kind of build that time up naturally, even though it's a pain in the butt.
Right. So, yeah, you're doing that from an incentive perspective, right? No real person would need to have more than necessarily one credit card on any given time in their lives if they're responsible with the money and they have a large enough balance.
Correct.
Or a maximum utilization for that card, right? So opening 25 credit accounts or credit card accounts only benefits the credit card companies, right? It's bad for people individually because that's a lot of responsibility. It's a lot of potential for identity theft. Right, there's just a lot of problems that come with that.
Yeah, I mean, I've, closed a lot of these accounts now and gotten rid of the cards, but I couldn't even have 25 credit cards in my wallet, and I have a big wallet.
A lot bigger than mine. Yeah.
That's a lot. So, But I think, a lot of people kind of get into credit card churning or travel hacking, and that's where you're cycling through credit cards. And I think you had a friend do that.
Yeah, and that's a good point. So if we're looking at, again, the time of credit on your account numbers, right? If you open a bunch of credit cards right now, it's going to sync that number because now you have a bunch of brand new credit accounts open, and the average is messed up then, right? So once you have like 5 or 10 years under your belt, then it might be a good idea to pursue this. But if you're brand new to your credit and you don't have a lot of other accounts, it's pretty risky. But I'll give the example of what my friend did. He basically, him and his girlfriend opened a bunch of credit card accounts. He followed a bunch of formulas online. There's whole websites dedicated to this process of opening these credit accounts and what deals and promotions are going on currently. And they basically took a month-long trip to Europe, completely paid for, airfare, hotels, a lot of amenities and all kinds of stuff for free because they just opened all these credit accounts, paid down the requirements over a couple month period of time, and then just got loaded with all these benefits. Mm-hmm. And his credit actually increased after doing that. And he didn't do a hard pull, right? So he looked on like Credit Karma or something like that to determine that his credit score had increased from what it was before he did this. But I was surprised by that, right? Because both him and his girlfriend opened a ton of accounts. They were spending on new cards, and it was just like, it should have sank their credit according to the math.
Well, so he had a couple things going from there. He was opening new accounts, which is a good thing. And he was increasing his credit limit, which kept his utilization low, which is a good thing. So it hurt the time, but it helped other variables. Mm-hmm. And another thing there is he might have opened some of these accounts, gotten the points, and then closed them. Mm-hmm. Because I know some of these accounts, like the Delta card that I got, has an annual fee. So I opened it, spent on it, kept it for the year or whatever. But after my free year was up, I wasn't going to pay to have this credit card.
Right.
So I closed the account. Well, then it's kind of like that time is deleted from your credit history completely because, the average is only factored in when it's an open account. Once it's closed, then it kind of reverts to your time is extended again, right? Because that short average dropped off and all of your old ones are still on there. Mm-hmm. So, then in that way, it just was another open account that I had at some point that I paid the bills on time on, and that is a little boost to your credit. And, I think this could go either way for people. And I also think, he didn't do a hard pull. So maybe if they were actually looking at that and they saw that blip of activity, they might have given him an X mark for it. And that's something that we don't really know because nobody knows exactly how these hard numbers are calculated.
Right. Again, not for lack of trying to find out. But.
Right. But, I think that's kind of something, there's a lot of people out there doing this credit card churning, and it's working for them. And I think especially, for us, now we're in a home that we own, really our credit score gets to a point where it doesn't matter. And I want to, so, we're a podcast that talks a lot about saving money and, building your net worth and growing in that direction. And that's something that credit score does not look at all. It does not look at how much money you have in the bank. So, another funny example to kind of counter what we've been talking about is I knew of somebody who just saved really well his life, whole life. And he was in his 40s and he was a millionaire, and he went to buy a car and he couldn't get approved for a car loan because he just hadn't been building his credit. He bought his house with cash. Mm-hmm. And, people who buy things with cash all the time like that, they have no credit. So then, this 40-year-old millionaire couldn't get approved for a car loan because he didn't have credit. So it's kind of like a backwards thing a little bit where, they focus on all these things, and we've talked about, all these variables to help you build your credit score. But at the end of the day, it is not a perfect system, and nobody in the financial world thinks that this is a perfect system. But it's what we've been using for years, and there's been no talk of, coming up with anything else.
Right. I think the users don't like this system. I think the people that work in the field don't like this system, right? I think it's just controlled by, really the three big agencies, and they hold all the cards.
Right.
And nobody's making a big lobby push to change this
But
system.
I will say it's pretty easy to hack, from when I was 18 until 23 buying my first home, you know, I had credit cards, I had the student loans, I had the auto loan, and then I got the mortgage thrown on there. So, you know, since I was 18, I opened my first credit card, I've always had good credit. Even by the time I opened my first one, it was, you know, in the 650 range. It went from like, I had no credit to in the 650 range. Because it seems like they start you out pretty high. So the big thing there is to just make your payments on time and, you know, keep building it slowly. And then when you need it, you have it. You know, that's kind of what I always say. And then if you never end up needing it, if you can pay for everything in cash, I have even more respect for you. So
right, then you're controlling your own destiny at that point.
Right.
So one last point from me then, with all the identity theft stuff that has happened in the last year or 2 years, where like Target's been hacked and Chase has been hacked, and you know all the banks, and basically every system you ever use, somebody's hacked into at some point, and probably has your credit card. Definitely have your email, username, and password.
Nothing is
if you
safe.
haven't changed that, right? So
Facebook's not safe. Right?
I know that they were changing the regulations around the credit agencies, and this is from a government perspective in the U.S. here, right? For being able to freeze your credit. So if you didn't need to take out a mortgage, or you didn't need to, you know, get a new auto loan or do any of those hard pulls, you'd be able to turn off your credit so nobody else could go do that without like a 2-step verification process. And that would protect you from identity theft. And so do you know anything about that? Do you know any more about that? I thought the last that I heard that they were pushing to make that a free service, so you didn't have to pay Equifax to turn that off, which they had required in the past.
Yeah, so, you know, honestly, I've not heard too much about it, just kind of about what you've explained. I do think it's definitely worth for people to look into and to utilize that if it is a free service. Like I said, I have not used it yet. You know, I've still been relying on my credit for different purchases, so I haven't personally had any experience doing it. But that would be a good thing to do. Another thing that, you know, a lot of people are getting into is kind of doing these like identity theft protection agencies that will like monitor your credit for you and alert you to any suspicious activity. I do think those are a ripoff.
Yeah, I think, because what wasn't it was not Life Alert. It was the other one. Or, yeah, was it? No, Life Alert's the one with the old people.
Yeah, that's
it's the other one. The other one that was like the guy was advertising all the time. Like his personal like credit got destroyed.
Like the pirate commercials.
Somebody, yeah.
Yeah.
Anyway.
Freecreditreport.com.
Yeah, one of the biggest ones. Like the guy put his social security number on a truck as a marketing scheme, and he was like,
oh, yeah.
It's so protected because it's all locked up and stuff. And like,
LifeLock.
LifeLock. He got his identity stolen like over 13 times or something ridiculous. Yeah. Like it didn't work at all.
Right.
Yeah.
And these services are not cheap. You know, I've worked with some clients who have been paying for these, and like, you know, one person was paying up to $20 a month for this service, and it doesn't even work well. So, you know, instead, I use Chase. You know, I still have a Chase credit card, and I have Citi. I get fraud alerts like all the time. Like if I travel down south, it'll be like, was this you buying a chalupa? And I'm like, yes, of course it was me. But, you know, so I think just kind of, you know, I kind of tell people, be aware of your own stuff going on. You know, keep track of it on Mint or Credit Karma. And if 1 month you pull up Mint and it's like, you had 5 hard pulls this month and you didn't, then, you know, start looking into yourself. But I think a lot of these services are charging a lot of money and not really offering any protection. So, you know, I think, you know, another thing I will look into more is freezing your credit. And if I determine that's a good thing for our listeners, I will report back on that.
Yeah, I think that's probably the safest way. Like, you can try and rely on the credit card companies to be monitoring that stuff. With AI getting better and like being able to automatically pull that data and look at it in real time, I would, you know, basically demand from that technology in the future to get better and be more reliable. I'm not confident in it right now, even though it is kind of prevalent in the industry, because I've had multiple instances myself where 2 of my credit cards have been hacked and I was never notified. But I was looking at my credit statements every day and I saw like, I did not buy this like $2,000 thing.
Well, the funniest example is the weekend we got married. Obviously, I don't stop checking Mint for a wedding because that would be ridiculous. And the weekend Brett and I were getting married, somebody hacked our credit card number and bought Super Bowl tickets.
Yeah, right.
2 tickets to the Super Bowl for $3,500. And I was like, all right, before I like go down the aisle, I need to know if he would have made this stupid purchase, because otherwise this wedding is off.
Well, they also, I mean, I thought they just showed up at our house first. Like, we thought it was a wedding present for a little while. And we were like, what happened? And then, then we saw the credit card transaction show up or post.
Right. But, a big thing is, like, every single month when we get our credit card statement, I'm going through every single purchase and making sure before I pay the bill that I agree with the total. Mm-hmm. And it takes some time, but really at this point it takes me about 5-10 minutes. I'm used to it, and I've already kind of been tracking everything throughout the month. And, that way, like, I know before anybody else knows. So, I think some of this is have a little bit of personal responsibility. But nobody cares as much about your personal finances and your credit score as much as you do. So you're the best person to watch it,
Yeah. And it's a lot easier to fix those problems, like call the credit card company and like tell them it's a fraud situation when those transactions are still in the pending state for a couple days, like as they happen. They can take those off and blow those away instantly with no questions asked. You don't owe any money, right? It's no problem. They'll cancel your card and give you a new card with a new number. And that's a pain in the butt, but it's better than like having to owe a bunch of money or like go chase down all these transaction fees for the last 30 days because you weren't paying attention, and like have to go to these like vendors or whoever, because the credit card company's not going to fix it then. You have to go cancel it with every single different place, and it's a mess. So, if you're actively monitoring it, you're saving yourself a lot of headache in the future. Exactly.
All right. Well, do you have anything else?
No, I think we covered a kind of a wide spectrum there. We started getting into identity theft. Sort of the end there. So.
Really paranoid people.
Yeah. I think, we don't have a lot of insight into if your credit score has been, tanked in the past, either from identity theft or from delinquent payments or whatever, and how to repair that over time. I think that's a different story altogether, because I think there's a lot of challenges there. There's services that will like help you rebuild those things like that, because once you get negative of that 650 that they start you out at, it's an uphill battle to, I think, solve those things. So I think that's a conversation for another day.
Yeah, but we did mention, how to improve your credit score, and those things apply to anybody at any score.
Being a good steward and just making sure to pay off your credit card every day.
Yeah, and like if your credit score is down in the 500s, but you start making on-time payments and you do that for a year, your credit score will go up.
Yep.
So. Mm-hmm. All right, well, we will wrap this one up then. Thanks for tuning in. If you have any additional questions, I will drop our contact information in.
Thanks, guys.
Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.